Here's the truth. Most business owners who dream of an 8 or a 9-figure exit never get there. And it's not because their business isn't good enough, because it definitely pays them lots and lots of money. It's because 80 to 90% of their net worth is trapped inside of a business that isn't sellable. Now let me be clear. This video isn't for lifestyle business owners who just want a paycheck and want some flexibility. This is for owners doing 1 to 10 million in revenue who want to build real, true generational wealth. And if that's you, there are 6 entities that you must have. Now, I'm not giving you legal advice here, nor am I giving you a cookie cutter solution. These 6 entities are the building blocks that the generationally wealthy use to protect, grow, and transfer wealth. Let's walk through all 6 together. The first entity is your operating company. You almost certainly already have it. It's where revenue comes in, where the employees get paid, and where the work gets done. Most owners stop right here with this entity. One LLC, maybe they get it taxed as an S-corp, and they think that's enough. It's fine if you're a lifestyle business, but if you're aiming for an 8 or a 9-figure exit, this is just the foundation. You'll usually see these entities as S-corps, PLLCs, or partnerships. But if you're in a partnership, I need to tell you this. You are personally liable for your partners. If they get sued, you're potentially on the hook as well. When you go to set up this entity or change it, don't let your accountant and your attorney work in isolation. They need to be in the same room, agreeing on the strategy. Otherwise, you could be optimizing one thing while potentially hamstringing another. This entity probably feels simple or basic, and it should because it is. But this is your first building block. The second entity is a Revocable Living Trust. This is estate planning 101, yet most business owners don't have it. A trust keeps your assets out of probate. It keeps assets out of your personal name and lets you stay in control if something happens. When do you need a revocable living trust? The day you get married. Absolutely once you have kids, and 100% when you start owning assets, especially a business. This is not the entity that saves you millions of dollars in taxes, but without it, you don't even have the entry ticket to advanced planning. Entity 3 is the management LLC taxed as a C-corp. This is where control lives. Think of this as your family office headquarters. And here's what runs through it. Management fees from your operating entity, the C-level executive salaries and shared employees between different companies, business vehicles, health insurance and benefits, startup ventures and incubation money will originate here. Even payroll for your kids can be in this entity. Separating the management LLC from operations reduces risks, unlocks tax strategies, and shifts you from an operator to an owner-investor. Entity 4 is the business limited partnership. What we call this entity is the family bank. And let me clarify, I know that family bank is a term thrown around in a lot of financial circles. This isn't just some buzzword. Here's what it actually means to us. Number 1, this entity actually owns wealth. The equity in your home, it's secured inside of this entity with a note and a deed of trust. Your rental property LLCs, they're owned by this entity. Your IP or your trademark LLC, they're owned by this entity. Your investments, your new opportunities, they're all funded from this entity. This is how wealthy families separate operations from assets. The operating company makes the money, the family bank holds it and grows it. Entity 5 is where most owners don't even realize the game is being played. the giving entities. There are two sides of this. Charitable split interest gifts. These are tools that give you tax benefits and income streams during your lifetime. And then number two is the private family foundations, where those gifts usually end up, where your family directs charitable giving for generations. Yes, these entities do help with taxes, especially around an exit, but here's the bigger play in my mind. It unites your family. Every year you can gather and bring your family together and decide what causes do we support, where do we give. That to me is one of the easiest ways to pass down values, not just money. I call this generational giving. It builds stewardship and unites the family and leaves impact that outlives any single business endeavor. The sixth and final entity is the Irrevocable Dynasty Trust. This trust is the beneficiary of life insurance, investments, even business interests. And most importantly, it sits outside the taxable estate. Now, why does that matter? Because today the estate tax exemption is about $15 million per person, or $30 million per couple. Anything above that is taxed at 40%. Build a $50 million estate, and you might hand $8 million straight to the IRS just for dying. And those thresholds, the 30 million threshold, they move. And with the country's deficit growing, estate tax, in my mind, is one of the easiest levers for the government to pull to lower that exemption. So even if 30 million seems high now, it could, in my mind, be lower in the future. The Dynasty Irrevocable Trust is how you get out of that uncertainty. Yes, it's complex. Yes, it costs money. But if your vision is true generational wealth, this is the entity that makes it possible without paying millions in unnecessary taxes to the government. So there you have it. The 6 entities that every serious owner investor needs. The operating business, the Revocable Living Trust, the Management LLC, which we call the Family Office HQ, the Business Limited Partnership, which we call the Family Bank, the giving entities, which gives us the permission to generationally give, and lastly, the Irrevocable Dynasty Trust, which is the capstone that weaves and intertwines all the entities together. Now, let me be clear. This is complex. And honestly, that's the point. The structure forces you and your professionals to work together. Your accountant, your attorney, your investment team, your insurance advisors, they can't stay in silos if this structure is in place. This structure requires collaboration. And that's what real family offices are. Not advisors leading you to where they lead everyone else, which is often in many cases just middle-class outcomes. Rather, you are leading your own team toward the future that you choose. At Big Life Financial, that's what we help owners do. We set up the structure, we align the professionals, we give you the permission to think bigger and to actually keep what you've built. Because if you don't use this structure, you're exposed to lawsuits, to overpaying in taxes, to watching your wealth leak away. But if you do use this structure, you're not just building a business, you're building generational wealth, generational giving, generational impact, all within one united 6-entity structure. That's the difference between a middle-class exit and the one that your aspirations are actually pushing you towards. I'm Justin D. Maxwell. Thanks for watching.